I just found a vet clinic doing $1.7 million every single year. Yes, the ultimate dream job where you're working with the cutest pets in the entire world. Not only am I going to show you guys how I found this business, we are also going to tier rank this business across the very intensive diligence checklist, but then also I'm going to show you guys some of the pain in the ass roadblocks that comes with doing a deal. And I'm pretty convinced that by the end of this video, you will learn how to find a business, know the right questions to ask, as well as how to identify if this is a good or bad investment. Why? Because the ball is in your court. You're going to have to vote whether or not we are going to buy or pass on this opportunity. So stay towards the end for that. And if you haven't met yet, hey, I'm Kenny Finance. I'm the private equity baby that came out the womb focused on 3 core things: finding great businesses, buying great businesses, and growing them. And I spent 10 plus years at the best private equity firms on Wall Street, Blackstone and KKR. And my only job here is to take everything that I learned on Wall Street and give it to Main Street completely for free. So let's dive into this vet clinic business and try to figure out if this is a good or bad investment. Let's rock. Part 1, the search. This part of the journey is all about trying to find an incredible business. And when it comes to finding business, most people actually don't know that you can find a business almost exactly how you find a house. Like when you're trying to go purchase a home, you can look at different listings online like Realtor, Zillow, etc. You can have a broker help send you properties that fit your criteria, or if you want to, you can go door to door and try to find an owner that is willing to sell their home directly to you. And FYI, you can use that exact same methodology to buy a business. There are listing sites like BizBuySell and Flippa and BizBin that have thousands of business listings available for you to research and try to find whether or not this is a good fit for you based on your price criteria, based on the cash flow criteria, based on the industry and geography, all types of different fields that you can put in. As well as brokers. There are so many brokers, or I like to call them middle people, that represent sellers that are trying to sell their business and match them with buyers. Very simple. It's a big marketplace and there's a lot of different bankers and brokers that can help you find the right business. And then lastly, if you're really about that life, you can go door knocking and cold call and cold email business owners and say, "Hi, my name is X, Y, and Z. I'm a Kenny Finance subscriber and I would love to purchase your business if you're looking to sell it." Boom. Plain and simple. Those are the 3 ways that you can go about finding cash flowing businesses for sale. We have a veterinary practice for sale in Michigan that has great revenue, great cash flow. And I thought to myself, I gotta lean in here. Number 1, they do $1.7 million of revenue. That's not chump change. And they're also doing $400,000 of cash flow every single year, meaning this is a scaled and profitable vet clinic. I love that. And then lastly, they had a prime location. And if you're trying to buy a vet clinic, location is key because you need to be central to all of the pet owners that live in your area. Plain and simple. So with all that, the next steps following this was sign an NDA, start to prepare my diligence plan, and then also have a conversation with the owners. And then you're really diving in. Now moving on to part 2, diligence. Diligence is essentially doing your homework to ensure that you are buying a good business. And when it comes to diligence, I like to break it down into a few core types of diligence. There is financial diligence, there is market diligence, operational diligence, team diligence, and then I like to think forward in the future a little bit and try to think through what is my value creation thesis. Meaning, once I own a business, what do I want to do with it? How do I want to grow it? And how can I innovate and improve the operations? So those are the key focus areas for this diligence sprint. And as you're thinking through these key questions during diligence, you kind of want to have yourself a little bit of a scorecard to see how is a business scoring on some of these key essential diligence items. Because in one area, they might be really bad. On another area, the market might be really good. On one area, the team might be trash. Or in another area, the operations are just sound and stellar. So you want to make sure that over the course of the whole diligence process, you are scoring and keeping a mental checklist of how exactly the findings are from this diligence process. And for us, we're going to use this S to C tier ranking sheet to outline how is this business ranking and tiering across all these different diligence streams. And there's a lot of questions that I like to follow, but I'm going to break those down across each of our 5 different diligence streams. All right, so number 1, financial diligence. Some of the key questions I like to think about, very high level. Has the business grown historically? Meaning, has there been a proven track record of revenue going up and to the right? And then next, will there be growth in the future? Like, do I believe that this business has the potential to grow revenue reasonably after I own the company? Because you don't want to buy a business that's going to decline in revenue. that's chalked. So a big item is understanding the revenue growth trajectory, historically as well as in the future. But then we want to consider all of the costs. So what are the costs associated with running this business so that we can understand one simple metric? What is the cash flow? Because in investing, cash is king. Cash is what you get out of the business after you pay all your expenses, after you pay your interest on your debt, after you pay your taxes, after you spend on capital expenditures, all kinds of things. What kind of cash comes back to you as the owner? And that is what we are very, very, very laser focused on. What is the cash profile? Now, I took a look in this business and I understood that this business was growing historically around 3 to 5%. Right? Granted, they weren't a crazy high-profile grower like a tech company or AI business. But that's kind of good to see that it had a stable track record of growing marginally. And it had a big bump in COVID, which I'll talk about later. But overall, I can suspect that if it did the last 10, 15 years of growing 5%, odds are they're probably going to grow the next 5 to 10 years around 3 to 5% as well. So I have conviction in that. And then what I love most is that this business had consistent cash flow margins. They were doing around $400,000 of cash flow for almost the last 10 years consecutively. So with that, not the fastest growing business, but a stable cash flow printing machine, I will put this one as a B tier. Now, what would have moved it up in our tier ranking? Well, number one, if it had a faster growth, right? But then two, if it had better cash flow margins. But overall, I'm pretty solid with this. Now, moving on, market diligence. Now, here are some of my key questions when it comes to diligencing a market, because the market is one of the most important things that you can look at. Because guess what? Rising sea levels lift all boats, I think. Kind of butchered that analogy, but you get what I mean, right? If you're in a good market that is expanding and growing and has positive tailwinds, odds are the businesses that are operating in that space will perform as well. Plain and simple. But here are some of my questions for the market. Number one, is the market growing, right? Is this a declining or growing market? As you can see, online streaming for video services, that's a growing market. Maybe like in-person DVD video rentals, that's a declining market. So that is a very clear example. Next one is existential crisis. Will this market be around for the next 50 years? And then I also like to ask, are there a ton of competitors? And for our diligence, we found that the market for vet clinics was on fire because the stats around pet ownership were going through the roof. Like, check out this chart that shows that pet ownership has done nothing but consecutively increase, which is very impressive. And as you can notice, there's a huge bump in 2020. That was during COVID, when folks were stuck at home, it was in lockdowns, folks were lonely. How did they get through it? They got themselves a cute little dog. And what I love most is even though that was a one-time big bump, folks aren't getting rid of their dogs and their pets after COVID. And there is a need for services, maintenance, boarding, all kinds of things when it comes to owning that dog for the dog's lifespan. Plain and simple. So overall, I will put this one as an S tier because the market for vet clinics is literally on fire. I love it. Now, operational diligence. This is when we want to think about like the actual day-to-day operations of running and producing vet clinic type of work and services. So what is the operational diligence questions? Well, number one, do they have all the proper equipment and team? And then are they offering the right services? Are they only providing general healthcare needs? Are they doing surgery? Are they doing only cats or dogs? Are they expanding into other types of animals? Or do they have other revenue lines that include boarding for dogs or grooming for dogs? There are a lot of different revenue streams that you can generate to diversify your business away from just general animal hospital needs. And for this business, we found that they had not only exposure to general animal hospital stuff, but they also had surgery, they also had boarding because they had extra space in their offices, as well as they had someone that was specialized in serving exotics, meaning that they unlocked an entirely different total addressable market of not just cats and dogs, but lizards and birds and eagles and other type of exotic animals. And that has given its a specialized skill set a higher average selling price. Now that's a good diversified revenue model. So the operations, check them out book, and I would give this one an A tier. Now on to team diligence. This is a very simple question. Do we have the right leadership team in place? Now a little bit of stats on the team for this business. They had one main owner that was the specialized vet that handled a lot of the difficult cases, but some of the general cases, they also had a junior licensed vet as well, and then they had a bunch of office staff. But given that the owner was looking to retire, that kind of posed the risk of having a gap in the leadership team as well as that specialized skill set for vet services. And that showed me that post-close, we will also need to hire another licensed vet. And they're getting expensive and it's harder to find them. And given that there's only theoretically 2 vets in the office, that kind of limits our potential for how much revenue we can generate because the vets can only do so much work in a given day or in a given week. So if we really want to expand the growth rate of this business, we need to improve capacity by hiring more productive vets. And that will cut out some of the costs as well. but it kind of offsets itself by having more licensed vets, more revenue, more business, and then the cost hopefully is not as much as your price of the revenue that you're bringing in. So therefore you have good margin on that and you're bringing in more profits. So if we want to scale, we got to hire more vets. So with all that in mind, I'm kind of in between like an A and a B tier, but given that like right now we might be losing a vet because the owner is going to be stepping away, I'll put this one as B tier. And now onto our value creation thesis. How are we going to send this business to the literal moon after I acquire this company? And for me, there were two core tenets to my value creation thesis. Number one was on the team and talent pipeline, and then two was on the marketing strategy. So on the team and talent pipeline, a strategy that I had was, given that it was hard to find and hire licensed vets, why don't we go downstream and go straight to the universities and develop apprenticeship programs and internship programs for students that are in vet programs so that once they graduated, they had already a top preference, aka my clinic, to go to after they're done graduating. That is one of the best ways to build yourself an enduring long-term talent pipeline, is to go to the passionate students. Granted, it might take a while for them to graduate and convert and start generating revenue and starting to be in license, all that kind of stuff. It takes a while, but once the machine is going, that talent pipeline doesn't stop. And then second, on marketing, I was so surprised to find that this business, along with so many other small businesses, don't do any marketing at all. They're just reactive to imbalance. Folks calling them, going on their website, and showing up at their front door trying to buy their services. But if we really want to be competitive in this landscape, we have to have brand presence, in my opinion, on social media. There needs to be a thriving Facebook page, an Instagram page, a TikTok, having amazing, funny cat, dog, animal videos, just to showcase how passionate we are about animals, as well as give proof to the quality of our service and the satisfaction of our customers. That is the importance and the significance of having a really sound brand presence on social media. And I am telling you, 99% plus of these baby boomers don't know what they're doing when it comes to social media. And that leaves an opportunity for young millennial and Gen Z business buyers to drastically improve the overall financial performance of a business just by posting organic content across social media. So do not be surprised if you go to my Kenny Finance Instagram and see that it has been converted to Kenny Loves Pets with a bunch of dog videos and all kinds of stuff, because I am trying to do whatever I can to scale and grow this vet clinic. And by the way, if you aren't following us by now, check us out on Instagram, where we do nothing but post smart money moves literally every single day in our reels and our stories, and try to give you guys as many bite-sized pieces of content. Appreciate it. Now here comes part 3. Let's unpack the roadblock. Now, with all deals, there's always something that just goes drastically wrong. You can just bank on it. There's always going to be a late night, a headache, an issue, a legal issue, the numbers are off, something that makes you question everything about life. But the good thing is, Uncle Kenny Finance told you to push through. All right, there's always going to be pain, but push through the pain. So here's the roadblock for this deal. My lawyer at Groundswell told me that even though this is a super cool, rock star, recession-resilient, stable business, you can't actually own the company. And I said, repeat that again, sir. He said, Kenny Finance, you can't actually legally own the company. In Michigan, there is a law that states that for healthcare businesses, hospitals, animal clinics, etc., you need to be a licensed practitioner, meaning an actual doctor, to actually own the clinic. I should have read the fine print before I signed the NDA, right? It happens. I'm not an expert in this. I just want to buy the business. I didn't know I couldn't actually do it. So I was like, is there a workaround? Because I've seen other private equity firms buy a bunch of vet clinics. And here's the structure that works, but make sure that you get very sound legal counsel when you're trying to set this stuff up. But this is what worked for me. Because I'll say it right now, Kenny Finance is a through and through investor. I am not a doctor. So here's my workaround. You are able, as an investor, to invest and form an entity called a managed serviced organization. And what this is essentially a business, a legal business that provides services to underlying clinics. Meaning, I don't own the actual clinic, but I might own the real estate, I might own the equipment, and I offer services, mainly back office, to the doctor and the practice. Now, the doctor and the practice is the one that actually puts their hands on the animals and improves their health and provides these procedures. I'm not doing that. The managed service organization, or the MSO, is not doing that as well. Now, what's important here is to understand the flow of dollars. The customer pays the clinic, The clinic covers the salaries of the doctors, but then all of the extra cash gets sent to the managed service organization through a management fee. Now, that management fee collects all the excess revenue, and that then goes to the managed service organization, which in theory goes to me since I own the managed service organization, right? Granted, I know it's a little complex, but to summarize it very, very, very simply, you form a business that provides services to a clinic in exchange for the revenue, aka a management fee. Very simple. And that, my friends, is a little bit of a workaround. But like I said, this is like complex next level private equity stuff. So make sure that if you are pursuing an opportunity like this, you have the right lenders that have done deals like this before, as well as lawyers that are familiar with these kind of structures. It is super important. Don't ever try to do this yourself. And that's coming from me. So in theory, we do get the revenue from the clinic. It's just in the form of a management fee after it covers some of the salaries of the doctors. Now, we found the business, we've done the diligence, and we've ranked the business across all the different diligence streams. We've understood that there's a really intense roadblock. Now it's time to vote. You pretty much know everything that I know. You know my likes, you know my dislikes, you know how attractive this opportunity is, you know some of the complexities. But now I want you down below to put in the comment section if you would or would not buy that business. I want you to put buy if you like this business and you think that it is worth investing. Feel free to add some extra commentary as well, or pass if you think that this is not that good of an investment. We should be looking elsewhere to allocate our dollars. So vote down below. And while you're thinking through voting, I am going to show you little clips of our very first customer once we own this clinic. And this is a little guy called Buddy Finance. He is the world's cutest, smartest, most value creation oriented pug in America. And he is focused on unlocking value for all of our shareholders and all of our subscribers. And he is the cutest little animal in the entire world. And he's a little monster. So shout out to little Buddy Finance. So me personally, I am a buy on this opportunity. So I'm going to submit a bid. And my thesis is that a 4 times multiple, meaning 4 times the $400,000 of cash flow, which they generate every single year, so $1.6 million, is a fair price. So I'm submitting an LOI to purchase this business for $1.6 million. Wish me luck, all right, please. And if you haven't already, smash that subscribe button because that's the only way you can figure out if we actually did this deal or not. But hey, remember one thing. There will always be another deal. So if we lose out on this one or if we proceed on this one, I would definitely let you guys know. But one of the best things that investors can always do is to ensure that they have other deals in the pipeline just in case if one other one falls through. And for us, we have another business that's all the way in Texas that is focused on doing funeral home services. That is right, a cash flowing business focused on the death business. So let's pivot our focus from vets and cute animals all the way to caskets and burials and funeral home services because there's so much cash to be made in that industry. So check out that next video where you can see my thesis on an amazing cash flowing opportunity, and we're going to also vote whether or not we are going to pursue or pass on that business. And I appreciate you guys to the freaking moon and back for watching this video, and I will catch you guys on the next one. Peace.